Hello all, welcome to Grad Sculpt. We'll show you the panorama of career options, each with its own unique landscape. So ditch the stress and join us on this adventure where learning meets opportunity. We'll equip you with the skills of knowledge, market trends, and future forecast. Our mission is to bridge the gap between you and the edtech companies holding the keys to your future success. And today I'll be presenting about stock marketing. Stock marketing is a very interesting and complex subject. As students, you must know the basics of stock marketing and start learning few details in order to be a future trader. First up, we'll see the introduction and also the brief meaning of stock marketing. The term stock market refers to exchanges of shares and stocks in the company. For example, if you own a company and if you need to raise money for your company, you will be selling a small percentage of the share or stock you hold to the people. So, in the initial stage, when a company is put up to the public, it's called as initial public offering or IPO. For example, if a common public or a person wants to buy a share from the Apple company, they will not be buying it directly from the Apple company. In that case, Apple, the company, will not be involving with people in order to buy or sell stocks. So, this is called a secondary market. The market where shares or stocks are sold is called a secondary market, and the primary market is the market where the buying and selling of shares or stocks is being bought by the company itself. So, such financial activities conducted through formal exchanges and via the over the counter marketplaces. So, in order to understand how the share market works, you have to understand the two types of market. The first one is the primary market, which we have already discussed, and the second one is the secondary market. So, the secondary market is where the stocks and shares are bought and sold within the regulators and the common people. And the primary market is where the company itself is involved with its shareholders or stakeholders. So here you will be seeing an example of the Apple stock, and when the Apple company is holding its shareholder meeting, we will be knowing how much percentage of stocks are being held by the company and how much are given to the common public. So there are several types of regulators all over the world. In India, we have SEBI. SEBI is nothing but Security Exchange Board of India. The SEBI is a statutory body which was established in 1992. So the work or the main function of SEBI is to regulate all the buying and selling of stocks. So not only that, in stock market there are certain regulators, certain intermediaries or brokers, in simple words. So these brokers will help you to buy and sell stocks. So SEBI will take care that these brokers and the normal people or the company itself is not involved in any harmful malpractices. For example, insider trading. Insider trading is a very important term for you to be learning as a student, because insider trading is where all the scams happen and SEBI is the in charge of it, so that it takes care that there are no scams through the way of insider trading. So to understand what is insider trading, you should know that in order to make the stocks value go up in the market, there are certain kind of natural or unnatural demand creators. So if you want the stocks price to go up, and there should be a demand. So by insider trading, the people, the manager or even the staffs of the company themselves buy the stocks or shares of their own company in order to create a artificial or unnatural demand in the market. So when the people of the company itself buys the stocks in order to create such an artificial demand, then the price of the stocks will grow up. So this is called as insider trading, and SEBI prohibits insider trading. So this is one of the regulation of SEBI. So, benefits of trading. We know trading is very beneficial, as you would have heard the term. Higher the risk, higher the profit, and lower the risk, lower the profit. Security trading or stock market trading is very beneficial because it has higher risk higher chances of you to earn a lot of profit. At the same time, there are potential risks. Stock market is subjected to market risk and market volatility. So I have listed down four important benefits of trading. The first one is profit potential. This point has already been explained because the risk is higher and the profit potential is also higher. The second one is portfolio diversification. One important thing that you should understand while investing in stock marketing is portfolio diversification. So you can invest in a stock which has higher risk, and you can also invest in a stock which has lower risk. So after the end of 1 month, when your stock matures, you will be able to gain significant amounts of money, and you will also be able to balance out the losses. The third one is liquidity and accessibility. The fourth one is flexibility and control income generation. Flexibility is nothing but you will be able to invest in the stocks at the comfort of your home, and stocks are will ensure liquidity. You can sell and buy stocks at any time, and it is also very quite accessible to everybody. Whoever is interested in stock market trading, they will have to gain and develop certain kind of knowledge, so it's quite accessible to everybody. Risks. Potential risks of stock market include capital loss. Whenever you are subjected to heavy volatility of the market, you will be facing capital loss. So what is volatility? For example, you are buying gold or a land. So when you are buying the land in 2020 and now the year is 2023, in 3 years most of the land or gold you would have bought would have seen a significant increase. So especially the value of gold is never decreased, it is always increasing. So the price you would have bought the gold 3 years ago would not be the same, it would have significantly increased. There is not much volatility when it comes to purchasing a gold or a real estate. But then in stock market the volatility is higher. That is why we tell stock market is subjected to market risk. By volatility I mean the price of the stock today will not be as same as the price of the stock tomorrow. So it is very important for a person who is investing in stock market to know in detail about how stock market works and why the price will increase or decrease. The third one is emotional stress. So by emotional stress I mean when you are investing a lot of money and when sometimes when you lose it, people will be subjected to a lot of stress. Regulatory changes. Our regulatory body, I mean in India it's SEBI. Whenever SEBI brings certain kinds of rules and regulation and do's and don'ts for people and investors, so that is also going to be a risk if it is apart, if it is controversial to the interest of people. Earning. So, according to the data, full time traders in India can earn a salary of anywhere between 4 to 10 lakhs on an average, and these numbers will go up to 20 to 50 lakhs for the top of the class participants. So, people will earn a lot with the experience they gain and with the amount of knowledge they have through stock market. So, as a student, what are the initial steps you will have to take in order to achieve great heights in stock marketing? So, let's see those. The first one you have to do is to read daily newspapers. You can observe that every newspaper has a business section, which is widely omitted by people. But if you want to become someone like Rakesh Junjunwala, the veteran stock marketer of India, you will have to read a lot of business sections of newspaper, business magazines, and watch business channels. One of the example of business channel is Z News. There are a lot many you can research about. So when you are reading these kind of newspapers, you will know the Sensex value, Nifty value, S&P value, and other analysis of the markets, political and social conditions that is affecting the economy. So the question arises, why should you know about economy and what are the political and social conditions that is affecting the economy and how it will affect your stock market trading? So for example, the recent stock market crash was during COVID-19 in the year 2020. So the stock market crashed during that time because people overall the world, they were affected by diseases, so that directly affected the stock market. So whenever there is war, whenever there is pandemic like COVID-19, and whenever there is scams exposed, you will find a crash in the stock market. One such interesting scam is the scam 1992 by Harshit Mehta, which led to a biggest crash of stock market in India. Scam 1992 is a very interesting topic. So, to explain about that in brief, the scam involved insider trading and artificial and unnatural increase of price of stocks in the market. That is, the demand of the stocks in the market was increased unnaturally. So it is said that Harshit Mehta used to buy a stock for almost like 200 or something, and he would sell it for almost 9,000 rupees. So you can see the price which is being increased more than twice or thrice. So that significant jump in the prices happened because he artificially created the demand in the market. So that is one of the biggest scam. And when that scam got exposed to the world, the Indian stock market crashed. And another recent example is the Heisenberg research. The Heisenberg research involved researching about stock market, small stock market researchers. So they researched about Indian stock market, and it also resulted in significant stock market crashing. So these are some of the real life examples. So as a student, you will have to learn a lot of stock market basics which I have listed right now, and also keep the habit of reading newspapers daily, especially the business sections. Thank you. For any further queries, you can contact us through the email which is listed in the PPT. Thank you all.